Nigeria's headline inflation rose to 21.91% in February amid a naira redesign policy that was meant to mop up cash and curb excess currency in circulation. Now, this is the second consecutive month inflation is rising in the year after it fell in December 2022. Data from the National Bureau of Statistics shows that the increases in the price of bread, cereal, rent, potatoes, yam, tubers, vegetables, and meat also drove inflation up in February. Perpetua Fasanmi-Peter has more on this.
Inflation spiked across the world, so much so that it reached a 40-year high in the US at 9.1% and touched 7.01% in India as of June 2022. In Nigeria, it also recorded a new 17-year high of 21.9% in February 2023.
Foreign inflationary pressure is actually premised on two things, which is the demand side and also the supply side. And we have noticed that the side that has to do with level of liquidity in the market actually been curbed by the CBN in the last months. But that side that has to do with structural activity, which also is, I think, is that has still to do with both the CBN and the fiscal policy guide. The CBN in the sense that the FX liquidity in the market and also the fiscal policy guide in terms of the security issue. Because as we speak, most farmers still couldn't actually access their farm under the guise of the fact that the level of insecurity in that area has actually affected them seriously. So for me, I think those are some of the things that actually pushed the inflation figure to the level that we actually saw currently.
A rise in inflation drives monetary authorities to further raise interest rates. Technically speaking, increases in interest rates result in a shift of assets from equity to debt as the risk-reward ratio changes. Also, as the interest rates keep on increasing, the risk-reward ratio keeps dropping, causing investors to shift from equity to debt. But is this the case in Nigeria's capital market today?
Equity market, if you look at it critically, before that we have started seeing the profit taking aggressively in the equity market, and this is not seriously. This is actually premised on the inflation figure that was released because the downward trend started far before the inflation figure was released, and also I think one way or the other the market is used to this high inflation figure, and because if you noticed in the month of December. The inflation figure was still north of 21, but yet we still saw aggressive buying in the market, even in the month of January. So I think it's not what we are currently seeing is not as a result of the inflation figure that was released, but based on the fact that a lot of portfolio managers are currently taking profits in the market. So also on the fixed income market, we have not seen so much effect of the inflation figure that was released. I would say my view is that inflation, the market has continued to discount the effect of inflation in the market, maybe also the impact of MPR in the market is not so much significant again, because if you notice that inflation figure has been, we've been trading negative real return for close to about over a year now, and nothing has been done on the market actually, at least to reverse that directive. So the market is used to this, and although we saw a bit of market correction, but that is not keeping up premise on the inflation figure that was released, because I think that is basically because there was NTB auction on Wednesday.
The Monetary Policy Committee (MPC) of the Central Bank of Nigeria has continued to raise the monetary policy rate (MPR) since May 2022. In January 2023, the Central Bank of Nigeria raised the monetary policy rate from 16.5 to 17.5% to tame inflation. Analysts have argued about how effective this has been in addressing inflation.
There's every tendency that we might start seeing a bit of dovishness, not totally being dovish, but maybe not as aggressive as what we used to see. Because for me, I don't think I expect more than 50 basis points, even if there's going to be any rate hike. And my view is still premised on the fact that as much as we are trying to actually curb inflation, we also need to continue to look at what will be the impact of this on growth. And also we started seeing the impact of this, the aggressive rate hike, even in the global market. We saw what happened to SDB, and these as a result of the hawkish stance of the Fed, and that's actually impacted the financial institution aggressively. And also, we also feel that could also affect the financial institutions and market as well. So I think the CBN will need to now start looking at many things, because now go beyond inflation that's currently on the table. You have inflation on the table, you have growth on the table, and you also have the health of most of these financial institutions, which is also very key to the government.
The rising prices of goods and services inject uncertainty into the market. During periods of rising inflation, corporations' profits and growth margins may be hit, affecting investor confidence. Investors try to anticipate the factors that impact portfolio performance and make decisions based on their expectations. As the Central Bank of Nigeria holds its 290th Monetary Policy Committee meeting on Monday 20th and Tuesday 21st March 2023, traders and investors are on the edge to know if the Apex Bank will maintain its hawkish stance or not. Perpetua Fasanmi-Peter, reporting for News Central Television.
And we'll be expecting to hear from the Central Bank of Nigeria's Monetary Policy Committee anytime from now. It's day 2 of the MPC meeting in Africa's largest economy, and the decision must be made. Will they hold the rate steady, or will there be an increase? Some have said that there is a potential for a 50 basis points increase, and many are warning that that could not be the path to toe. All of this comes at a time where Nigeria and many other African economies are facing the complications of the macroeconomic headwinds that are coming globally. Russia-Ukraine crisis is still on, but now we have a banking mini crisis. Let's not call it a full crisis yet, with the collapse of Silicon Valley Bank and Signature Bank in the United States. And of course, what's happening in Switzerland with Credit Suisse now being bought by its rival UBS. So a number of external factors are in play as many African economies across the continent will be making decisions about their rate hikes in the next few weeks. But today, we will get a decision from Nigeria. And that's it on Business Edge. Make sure you stick around, because we have News Central now coming your way at the top of the 12 o'clock hour. But don't forget to follow us at News Central TV across all social media platforms. Visit our website, download our mobile app to stay up to date with all the latest news and information coming from the continent. I'm Tolu Lokwe Adila Rubalogun. Have a fantastic day.